All right, hello and welcome back to another whiteboard lesson. Today I'm going to give you the answer. That answer you've been looking for since you started this whole trading thing. The answer to every single large trading loss that you have ever taken. I'm going to tell you why you took that loss and how it happened. Now before I start though, if you want to keep up to date with the educational content from the Lincoln List and you like these whiteboards, click that you like the video and also subscribe to the channel showing your support and our other social media outlets posted here above. Now before I start though, let me try to say that there are two types of losses that traders take. The first is going to be what we call a cost of business. I'm just going to write the cost of biz. And then you have this other nice loss we often run into. I'm going to call it the ego loss for now. It goes by a lot of different names, but let's call it ego for right now. Now, a cost of doing business loss is us professional traders and professional traders in general understand that they have to take certain losses in order to get the big gains that they're looking for. So for every trader, they have a trading plan, and I've talked extensively about this. If you're new and you don't quite understand what that is, just go up to the YouTube search bar and click on some of my other whiteboards. I have extensive topics about how to set up the proper trading plan. But for every trader, not only do they have a trading plan that defines a specific type of instrument that they're going to trade and the type of setup that they're going to trade, it also defines for each and every trade, because each and every trade is different, a specific profit target and then a specific loss. Now, because we're all human, we're not going to win. I don't care who it is or what they're selling or how the most accurate professional trader in this entire world is not going to be a 100% winner. You're going to have losses, and if you have a long, sustainable career like I have that spans almost 20 years, you will take several thousands of losses. So there's a cost of doing business there. Just like when you go to work, if you go to work every day and you drive through traffic, putting gas in your vehicle to get you to your job, that's a cost of doing business. So we understand that in order to experience a very big win and to drink that wine and taste that victory, we're going to suffer some defeats along the way. Now that part of losing is okay. If you enter yourself a trade, you go into a trade and you have a specific stop loss or a specific risk in mind and you adhere to that risk, then there shouldn't be a problem. So you go into a trade, you already know before you go into the trade how much you're going to lose. And this is one of the things where traders really mess up psychologically, is they get upset as to whether or not a trade works or it doesn't work, rather than looking at, I'm going into this knowing the worst case scenario. So let's say I'm going to go into a trade and I'm going to lose $1 max on this trade, and I have 100 shares. That means my entire worst case scenario, if everything falls apart and this thing does not work, the very worst case scenario, I'm going to lose $100. And if I'm okay with that, then I take the trade. This is what we call the cost of business. Now there's this other thing. It's called the ego. Now the reason that you end up losing money, the ego can also be defined right here as you. Okay? This is you. So let's say, for example, I get into that same trade and I say that I'm going to lose $100. That's what I said. That was my cost of doing business. That's where I did my analysis. That's where I came up with my risk. And I was okay with that at the time. Then what happens is it gets down to that stop area or down to my max risk. And all of a sudden, I make an excuse. Now, I know you guys have traded for a while, know what I'm talking about. And I'm not going to sit up here and act like I'm holier than thou, and I've never done this either. You start making this excuse, well, let me give it a little bit more time. And maybe it just starts out like that, and it goes a little bit below your risk, okay? And then maybe you get aggressive and you add to it, because you're like, well, it should go up now. And then it just continues to go down on you, or the trade continues to kind of go against you and go against you a little bit more. And the further that it goes down, you reach what we call, this is something we recently talked about in one of our classes, is a panic point, okay? Now, a panic point, I didn't even write the word point. Who really pays attention to anything I'm writing anyway? A panic point. A panic point is, for us as a trader, the way I define it, a panic point is where you realize that this loss here got further away from you than what you expected. And that loss is now larger, far larger than a series of your wins. Now let me try to kind of sum this up to make it a little bit better. There's this thing called trader math when it comes to losses, okay? It's not the amount of money that a trader loses, right? It's not, let's say it's just $100. So $100 may not be a lot of money if you're gonna go out and take 10 people to dinner one night at a fancy restaurant. $100 is a bargain, right? $100 is not very much money. But if you lose $100 on a trade, but your average winner is only $10, well, that's enormous, right? Because you realize at this panic point, you're probably going to need, let's say hypothetically that is the case, you're going to need 10 winning trades to make back that $100. So it has nothing to do with the $100, right? Nothing at all. It's just a matter that $100 is huge because you know you're at the panic point and you can't make this money back with your trading. It's going to take you 10, 12, 15, or 20 losses and wins, in order to make that back. Now, what happens when you get to the panic point is you realize, why I call it the ego loss, is because you're going to sit there at some point rather than accept that loss. Accept the fact that you're wrong because you already made excuses for it at the beginning. So when you had the opportunity to get out of that trade for the $100 loss, somewhere you made an excuse for it. Either you didn't want to take it at the time, you were tired of taking losses, maybe you had a couple of losses in a row, you weren't in the mood to take a loss, whatever it was, doesn't make a difference. You made an excuse for that, and now it got worse. Then when it got worse, you moved from the ego loss down to the panic point. And this panic point's got you at this spot where you realize, I cannot cut this trade because I'll never ever make this back. Then you begin this long, drawn out battle that can have massive consequences to a trader. Now, the reason I say this is because you will see so many things online, and I am one of these people that blew up 2 accounts when I started. And you see lots of people blowing up accounts. And to be honest with you, that's the stupidest thing that you could ever do as a trader. There should be no reason that you blow up your account. So when I go back and I think, well, why did I blow up my account? It's because of this. Because I originally started out with this right here. The cost of doing business, an acceptable loss, an acceptable position size. Then somewhere between this highway, let's say this is a highway, like a little highway to ego here, something went wrong in my mind. I changed my plan and I didn't take the loss. I made excuses, then I ended up at a panic point. Then what I did is we start fighting. You'll do this. You'll start fighting with this down here. You'll add to that position to get more aggressive to get out, because then you'll wish you would have took the $100 because maybe you're down $1,100 or $1,200. So you choose to fight with that. And there's something that happens there that I'm not going to go into in depth today for the sake of time, but then you start burning what we call emotional capital, okay? And emotional capital is the worst capital because you're burning up your mentality, your brain. You might possibly be losing sleep at night trying to fight this thing off of its panic point. And in turn, what it's really costing you is not just the $100 here or the $1,000 here that you're losing, but what it's doing is it's costing you all this future opportunity that you're missing out on because you can't pay attention to your future opportunities because you're too busy fighting with this pile of you know what. All right? So the answer to your question is, if you're sitting there and you're saying, my losses are too freaking big and my gains are too small. Big problem with traders, whether it's on a smaller size and they're keeping you from profit, or you're just a chronic account blow up person, okay? The reason that it happens is because you get out of plan. You go from a cost of business into an ego situation where at some point you allow this to go further than what you said at the beginning. So what is that answer, you ask? Oh, wise one, what is the answer to the question, why, how did I take the biggest loss? You did it. It was you. At some point on this highway, you had a chance to get off of it. You were at a fork in the road, or this period of time where you knew that that trade wasn't going to work. You knew you were wrong and you had an out, but you didn't take it. And now you got yourself a problem. So the answer is you, okay? Now I don't want you to feel bad about it because I've been in this situation thousands of times in my career. And occasionally, sometimes I still find myself in situations. It will always be an issue with me. I've learned to live with it, control it, and do much better with it. But think about it. Every big loss that you've ever taken in your life, think of the biggest losses you've taken, you had an out. You had an out early where it wasn't as bad, and you knew you should have took it, but you didn't do it. So that's the answer. How do we fix it? Discipline. Structure, discipline. Do what you say you're going to do. Because if you want to be successful in this, I know it's going to hurt. It's going to suck at the time and you're going to be angry. But over time, you're going to wish that you had this type of behavior because that's what's going to make you successful. Ain't going to be reading charts. It ain't going to be drawing lines. Ain't going to be fibs and MACD crosses and all that crap. That's irrelevant when it comes to discipline. That's irrelevant when it comes to doing stuff like this. So anyway, guys, I hope that helped you out. If you need help with it, you need structure, you need discipline, you need guidance, visit thelincolnlist.com. Thanks for watching this whiteboard. Until the next lesson, take care.